it now has a simple solution. So yeah, I mean, we transact seller finance notes. You just got to make sure you're following the most. And then there's some states have their own version of the SAFE Act. So I would be remiss not at least mentioning that as well. That is similar to usually something in Dodd-Frank. So know that in your state as well, if you're going to be a repeat seller financing. And then there's a point where you do enough of them, then you might be considered truth in lending under TILA, that you might need an actual mortgage loan originator license. But most of us do less than that, or make sure we do less in any one entity to be sure that
if you get that big, you're going to know that you need to do it, and that you're going to avoid it if you choose to, right?
Yeah.
But yeah.
So I think we did a good job altogether answering that, right? Without being legal advice. Okay. All right. So what's happening in 2022? Well, interest rates are on the rise. When interest rates go up, payments go up. When payments go up, less people qualify. Yeah. It's harder to get financed right now. It just is. I just read a big article on how arms are coming back because people can't afford the payment without an arm. And so it's like, 08, I feel like 08 all over, but okay. I'm just,
we're missing right now is the arms.
Yeah, I know. So there's inflation, there's uncertainty. People don't know what's going on with the war and things like that. So we believe, and the only piece that's keeping all of this afloat, I think, is supply and demand. So we keep seeing property values go up because there's so much demand and so little supply. And a lot of markets have less than 1 month of supply. And they say it's 6 months or more, right, to be an even market. So that's what's keeping everything going right now, in my opinion. But even if prices keep going up, just by fact that it's harder to get traditional financing is the reason that I think we're seeing an increase in seller financing. So this is from the Mortgage Bankers Association at MBA.org. This is conventional lending. They track what they call the Mortgage Credit Availability Index. And you can see that it was very prevalent when that number is high, when that graph is high, money is really easy to get from the banks to buy a home. And when the number's down below that 100, basically, it's harder. And I drew a green line across where we are right now compared to where we were in the past. So you can see in about 2020, when COVID hit, the banks pulled back and they started making it harder to get a loan to buy a house. And we see every time the interest rates pop up, the mortgage availability also pops down. And so we predict that mortgage availability, as interest rates will rise, will continue to go down. And as mortgages from banks are less available, then seller financing usually comes in and takes up the slack and picks up the difference. And so right now we are tracking about the same kind of mortgage availability as we were in 2014 for reference.
Wow.
Interesting.
Yeah. So I did one more thing, last chart, I promise, because we could geek out on these numbers forever.
Absolutely.
Right? I laid them side by side just because I want people to think that when mortgage availability is low, seller financing is high. And when mortgage availability is high, seller financing gets lower. So I predict, I don't have a crystal ball, but I predict that, like last year I predicted we'd see the same or less in seller financing in 2021. And here we saw more. Right now, I think the signs are clear that we will see more because of the interest rates going up predominantly.
And like you said, the only thing keeping everything afloat here is the supply.
Yeah.
It's not going to last forever.
Yeah.
So I am putting in the link for the MBA inside the chats for everyone, so you can look at that. So you can look at these charts yourself and kind of get an idea where you think there are in comparison. You can see month after month where it's at. Understand that the MBA is a big place, right? They do a lot of data. They do a lot of stuff. And they also host web conferences as well. We actually have the NBA conferences on our portal. And if you want to attend them, they're a higher level of information, right? They're not the basic knowledge. Take a look at this stuff. The biggest charts are what she's showing you here, as well as charts where it deals with like the income, right? And that's another chart to look at, is how is income compared to house values? And that if anyone watched Big Short, you'll see that that's part of the movie is what is how much people are making compared to what house values are. We're now past the threshold again, like we were back in 06, 07, 08. That's indication to us, and we're not sure exactly what's going to break. We're not sure what's going to put that door, but when you walk around like we did back then and say, it just doesn't make sense. We know something's coming around the corner.
Yeah, when the average median income can't afford the average median house, that's when your market's out of whack.
Yeah.
Yeah, that would be another great chart to pull up next. Is if anybody wants to see the stats, they're welcome to download the report at noteinvestor.com/stats, or you can just go to our homepage. It's there on our homepage, and it's free to download that. I love doing the stats. There's a lot of valuable information there if you're a marketer or if you're somebody creating seller finance. We talk about on our website how to create a seller finance note. If you wanted to resell it for top dollar, what are the best terms and rates and borrower credit and that sort of thing, because I'll look at a note and there's some notes I can pay 50 cents on the dollar for and some I can pay 95 cents on the dollar for, and that all has to do with how they were created and the buyer's credit and how many months of seasoning. But I'm talking a brand new note, there's that much difference just based on how it was created.
Yeah, absolutely.
So Cindy said thank you, that you and Fred are rock stars, of course.
Oh, thanks.
One of the conferences, there's been a lot of conferences, of course, lately. I didn't go to the MBA one and the DME one, but I wanted to see, are you be going to Paper Source at all? Or you be going to conferences moving forward that people can also see you as well there?
Yeah. Well, we did IMN and DME. We're not making it to Paper Source. I'm sorry. It's a great conference. It's good. I know there's a Realty IQ has got an online conference coming up I'll be speaking at, and then we definitely go out to Quest Expo in Houston. That's a great conference. It talks about a lot of investing in notes and real estate through your self-directed retirement account. We always go out to Note Expo as well. And then Fred and I host our virtual online convention every year, Cash Flow Expo. I know you guys have spoke, thank you. And we also do Wise Women Expo. So those are the ones we've got coming up right now. There's a lot of conferences this year because everybody was
making up for it
after COVID.
I'm gonna have to add Quest on to our portal note conferences. We have a whole list of them. If you're curious about what's coming up, feel free to jump on the portal note conferences. I'll do a quick share so you guys can see what I'm talking about. But it's the idea of getting involved, being active, right? So as you can see here, we actually have a lot of stuff on here already. And you can obviously see what's going on and see what's happening, what's coming up. Get involved, ask questions. If you're not familiar with it, ask us. Hey, listen, has anyone gone to this conference? Has anyone looked at this conference? And it's a good way to kind of get involved. You can see the dates coming up. You can see where they're going to be, the link right for them, right? And I'm trying to add them as we come along. Me and Nathan will be speaking at Paper Source. That's coming up just literally in less than a month. So definitely jump in and ask questions. If you see a conference coming up that we don't have on here, let us know about it too, right? So Tracy, with all this information, it looks very attractive for seller financing, right? This idea of getting a hold of these billions of dollars of notes seems easy. Is it that easy?
It's hard to market to them. So I tell people, if you like that market, you have to approach it two ways. I can either associate with someone who's out there marketing for that paper, and you can buy it on that secondary level, or you can get in there and market direct to them. I think it just depends on how much time and energy you want to put towards it. So the other way is that you could be a seller financier yourself. You could buy a property with the intent of just turning around and selling it on seller financing and wrap it and make a difference on the spread. So you create your own notes, or maybe you want to market just to those multi-sellers. That's a different approach where you just want to reach out to the people who are doing a lot of these notes and just be their source to replenish their capital. You could either lend against them, you could buy a partial, maybe you could buy the whole note. So you kind of have to decide where you want to play in that, because going after that mom and pop who just created one. It's a time intensive venture because you've got to do direct mail or Google ads or SEO or outbound marketing. You have to realize that not all of them want to sell, and some of them want to sell, but they need curative work done to their documentation because it's next to, a napkin on a diner.
Yes.
Close to that. Some of them won't like the price and won't sell. So some of them you have to nurture for 1 or 2 years.
So it goes from the beginning of getting the data, which isn't easy to do, right? To getting the data and trying to get a hold of these people, like reaching out to banks, same idea. Then if you get a hold of them, you have to educate them, understand time value, right? I love your talk about the fact they do the 50-50, 25-25. Seems so much more easier to teach them that than time value. But the whole process, and then when you get them to agree on a price, you have to cure the collateral file because it could be all over the place. Is there no? I don't know.
Yeah,
it's not for the faint of heart. I will say you get better profits.
Absolutely, the returns are ridiculous. Yeah,
you get paid for that effort.
Yeah. So if anyone has any questions, Tracy's been around for a long time. Check out our little website. This will be replayed on YouTube and Facebook group and our the podcast as well. It's amazing, this information and being aware of it, right? This $23 billion created last year, and you figure it's 100 and whatever, 123 billion in the last 5 years. This is a market that's available, out and ready to go, and a majority of it is a one owner, one creator note, which means that those people are not the big bulk sellers, that they're probably more apt to selling than these bigger banks who are looking to say, listen, I don't want to sell or whatever reason. These are mom and pops for some unknown reason. They want to sell property.
And there's lots of reasons.
Because the buyer or the property didn't qualify.
That's most likely it. Yeah. Especially in Texas, there's some people out there who can't get loans, or the fact that they don't want to create a loan for a low value property. It's hard.
Yeah.
So.
What were you going to say, Nathan? Sorry.
I was just going to say there's, and for this the note holders, there's lots of reasons they want to sell.
Yeah.
It could be as simple as, wait, I can get a chunk of money right now. Okay. And that can be used for anything, whatever they've got. Kids going to college, they want to go on vacation, they're doing renovations on their own home. I mean, you choose, there are tons of different reasons.
They want to get into crypto.
Yeah. They know the person too well, and it's awkward.
That's a lot of times it.
So, and one last thing is that when you're experienced buying these seller financing, do you have more success buying a partial from these people or buying the whole thing? I know that's a big conversation piece.
I try to buy a partial on every deal, but some of them will only sell. They'll say, if I'm going to sell, I'm only going to sell it all because I want the peace of mind. Yeah. So I always offer a full and a partial. And I always explain to them why the partial is a better deal, because they're selling the most valuable payments and how much they're going to get back at the end. And they can always sell some more payments later. So I try, but some of them will only sell because in their mind, the discount's worth it if they can just be rid of the problem. So you have to go with what serves their needs and desires the most, but I always give them the option because partial is better for all of us, not just me, but for them too.
Yeah, it's true.
Yeah, that's awesome. Well, guys, feel free to reach out to Tracy, and ask questions and curiosity, stuff like that, because it's a big deal, the seller finance world. It's different from the bank originated, institutional loans out there, Fannie and Freddie loans. It's a new world, new market. It's awesome. So I hope that you guys learn some valuable stuff. The data here is attractive to most of us, and it's really cool.
That's fascinating. Thanks so much, Tracy. This has been
Thank you so much.
Yeah.
I appreciate
Thanks for having
your time.
me on. Thanks for all you guys do. It's a great group, and I appreciate the time.
Absolutely. Thanks, everyone.
Thanks so much.